So as we look at it, we're remaining conservative in our portfolios. We're underweight to equities. But the perspective and the advice we're giving clients really depends on whether you are a fully invested, hopefully in a diversified portfolio, or whether you have some cash on the sidelines. If you're fully invested, then one of the best things you can be doing right now is to rebalance your portfolio. That's a bit of a secret weapon during these volatile periods. And if you rebalance when the market's down, you actually end up with more money than if you had just bought and held through the weakness and the recovery. And for those clients who have cash on the sidelines, we're advising them to get some of that to work, maybe on a slightly more compressed time frame. We're already down about, notwithstanding yesterday's rally, about 30%, which is the average for a recession. But this is very unprecedented. We don't know, we've never had an economy stop so abruptly. And the biggest thing that is going to drive the market and whether this is a sustained rally is time. If we do get the economy back up and running on a time frame that the president was suggesting over the last couple of days, then this could be sustained.
Yeah, that doesn't seem realistic, though, right?
Right.
I mean,
so
large pockets of the economy are not opening on Easter.
Exactly.
I don't care what anybody says. It's just not going to happen that way.
There's some downside risk to that, and that is why we're remaining conservative, because we think that it's probably more likely that that time frame has to be extended a little bit.
Yeah, Carrie, in all of this conversation, it's not like you're doing nothing. You are buying some stocks, and we have heard from folks over the last few days who, in fact, are doing the same. Why don't you tell us what you're at least looking at, what you've added, what you're thinking about? You still may.
Well, you have to look, as Megan said, as how your portfolio can be upgraded. If possible, you have names that might not be able to sustain a long downturn where they can't sell their products and they don't have enough cash on hand. So, for example, we bought Microsoft. And Microsoft is what I would now call an essential company. As you, Scott, may be an essential employee at CNBC, they need Outlook. Everyone needs to be able to use what Microsoft offers. And I think with $130 billion in cash on hand, it's the kind of name which we didn't own before. We own many tech names. We don't own more than 35 stocks. But this was when we didn't own. We had an opportunity to buy it for less. And that's when we bought. We have also added to names like Visa, to Zoetis. It's a veterinary products company. We added some to Blackstone because it got totally destroyed, to Salesforce.com, and to PayPal. So we also sold a few names because we thought we could, as I said, upgrade the portfolio. They were good companies, but might have trouble in a market that isn't going to have tolerance for companies with little cash and very little cash flow to sustain themselves. So we're not buying lots of names or lots of new positions, just Microsoft, but we are adding where we thought it makes some sense.